Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CEB Bank interim report. China Everbright Bank Company Limited offers a diverse range of financial products and services to various clients across multiple regions. Some of the key businesses and services provided by the company include deposits. Notice RMB General Intelligent Agreement, Structured and Other Deposits Loans, Working Capital, Fixed Asset, Project Financing, Syndicated, Entrusted, Personal Loans, E-Grain, E-Mortgage, and E-Catering Loans Credit Facilities, Overdraft Facilities, Credit Cards, Debit Cards, Investment Banking Services, Bond Underwriting, and Financing, Corporate Asset-Backed Securitization, Credit Asset-Backed Securitization, Intermediary Business Risk Management Products, Interbank Business Products, Interbank Lending and Deposits, Fund Custody, Clearing Agency, Issuance of L/G Asset Custody and Management Services, Monetary Market, Bond Investment, and Proprietary Bond Trading Business, Foreign Exchange Trading, Mobile and Online Banking Services, Fee Payment Platforms, Mobile, Electronic, and Cloud. The Council of Europe Development Bank, CEB, has experienced significant financial growth in its audited accounts for the year ended December 31, 2024. This growth is attributed to several key factors. 34.1% increase in equity from €3.5 billion to €4.7 billion, a 13.8% rise in net financial profit to €124.3 million, a 14.8% increase in core earnings to €133.4 million, a 12.2% growth in total assets to €38.6 billion. These improvements demonstrate the bank's strong financial performance and stability, which has been recognized by leading rating agencies, reaffirming its AAA credit rating. In contrast, Cebu Air Inc., a publicly traded airline in the Philippines, has shown a significant range in stock price over the past year, with a potential increase of over 42% from its 52-week low to high. However, specific news events driving this growth are not specified in the provided information. The primary drivers of revenue growth for the company are largely attributed to its expansion into new financial sectors. Technology finance and green finance have seen significant growth rates of 9.88% and 12.37%, respectively, contributing a substantial RMB 37,503 million and RMB 51,099 million increase in revenue. Additionally, corporate banking revenue has increased by RMB 94,936 million, driven by a rise in balance of corporate deposits and loans. The company's digital finance segment has also seen steady growth, with a focus on online operations and ecosystem integration. Furthermore, the family trusts and pension insurance products have experienced significant increases of 56.12% and 10.85%, respectively. The private banking AUM has also grown by 4.99%. On the other hand, the primary drivers of revenue decline are largely due to a decrease in corporate banking revenue, which dropped by 2.82%. This was attributed to a year-on-year decrease in operating income. Additionally, financial market business line operating income decreased by RMB 146 million, or 1.57% year-on-year. The spot assets also saw a significant decline of $67,222, minus 20% decline, from DEC 2024 to June 2025. Net income and profit margins. A mixed picture. The financial summary reveals a mixed picture of net income and profit margins over the past year. On one hand, net income increased by 0.53% from 2024 to 2025, indicating a slight improvement in earnings. However, this growth was short-lived as it decreased by 2.82% later on. Profit margins also showed some fluctuations. The net interest margin declined by 14 basis points to 1.4%, while the return on average total assets dropped from 0.73% to 0.7%. Conversely, the cost-to-income ratio increased by 1.07 percentage points, indicating a rise in operational costs. The operating income remained unchanged at 100% year-over-year, suggesting that revenue growth was offset by expenses. The net fee and commission margin decreased by 0.85%, while other income margin dropped by 10.21%. Overall, the changes in net income and profit margins suggest a challenging business environment with some areas of improvement and others requiring attention. The company's financial performance indicates a strong ability to generate cash from its core operations. with net cash inflows from operating activities totaling RMB 112,285 million. It is clear that the company is producing positive operating cash flow. This suggests that the business is financially stable and capable of meeting its obligations without relying on external financing. The company's debt level has experienced significant fluctuations over the past year. While it decreased by RMB 102 million as of September 2024, it increased by $37,098 and RMB 131,840 in subsequent periods. The total debt level at the end of June 2025 was 420,561 million RMB, a notable increase from December 2024 and June 2024. However, interest expenses have consistently decreased across various periods, with some instances showing a year-on-year decrease of up to 14.85%. Overall, while the company's debt level has increased, its interest expenses have significantly decreased. The company's financial performance varied across different regions and segments. The Bohai Rim, Yangtze River Delta, and Central China regions showed significant growth, with increases of 12.7%, 6.5%, and 8.1% in operating income respectively. Corporate deposits and loans also performed well, with a 5.87% increase in deposits and an 8.6% increase in loans. On the other hand, the Pearl River Delta and Western China regions struggled, experiencing decreases of 4.3% and 2.9% in operating income respectively. The corporate banking segment also underperformed, with a 2.82% decrease in business. Management's outlook on company strategy. The bank's management is intensifying support for key sectors such as advanced manufacturing and private enterprises. To drive business development, they are focusing on innovation, technology empowerment, and digital transformation. The bank will also prioritize pension finance with high-quality custody services and invest in technology. A stable investment strategy will be maintained, investing in various sectors including financial leasing, wealth management, and commercial banking. Green finance development will be bolstered, supporting key areas such as green buildings, transportation, and energy transition. ESG work is being prioritized, incorporating ESG management into the company's development strategy, business management, customer service, and product innovation. The company has a history of paying dividends to its shareholders. According to the financial summary, dividend payments were made in both 2024 and the first half of 2025, totaling RMB 11,167 million and RMB 1,406 million respectively. However, there is no clear confirmation that the company has bought back shares, although some pages mention share buybacks or repurchases as part of lending to support listed companies. Concerns over inventory buildup and supply chain disruption loom large. The financial landscape is marred by growing concerns over inventory buildup and supply chain disruption. The manufacturing industry, in particular, has seen a significant increase in loan concentration, rising by 9.19%, page 28. Furthermore, non-performing loans, NPLs, in the manufacturing sector have surged, increasing by 346 million RMB from December 2024 to June 2025, page 32. These developments signal potential issues with inventory management and supply chain resilience, which could have far-reaching consequences for businesses and the economy as a whole. That concludes the financial summary for CEB Bank. Feel free to comment below, and I will be happy to answer them when possible.